Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extends its weekly tops near the 60-day moving average on Wednesday and showed some hesitation after inking in an intraday high of 71.58. From the backing away, we can see that the market is a little bit softer into the European session as the indicators are buckling somewhat. With the support seen minor at 71.05, a break here would give further exposure down to 70.55 and reassess from there. Any upside attempts I still feel from 45 beyond there to 71.80 figure, where the 60-day moving averages should contain the bulls and most probably see a bull trap. The euro, since its stab overnight at 113.15.25 area, the market has been somewhat weak, although there is speculation that the non-farm payrolls number tomorrow might be a little bit weaker, with a forecast of around 145,000 jobs, with a previous of 199,000 jobs added in this late last year that could see a weaker dollar. Overall, though, I feel the market may underestimate the actual figures and may see a rebound in the US dollar, because I feel the dollar can continue on as the euro should retreat from this top side and look down towards 112.45, 111.90, and then the base, which was rejected at 111 the figure. Dollar yen still holding to a somewhat negative pattern here, and I feel the market can actually break down further to 114.30, which was pretty much seen today, and then lower to 113.65, and is from there most probably see some intraday demand. So most probably find that it could get a rebound from there and look back up towards the top side of the range around 115.5 to 116. Well, with Super Thursday here, all eyes on the Bank of England, as there is expectations that we might see a 25 basis point rate hike. Therefore, could see some strength coming back into the pound and push on towards 135.70 to 136.5 as a potential target, where I've outlined here. MACD still mirroring up to the strength of the RSI, so I feel there'll be limited pullback unless we get some kind of a dovish statement, which would see the pound drop very heavily. But I feel the market's still very much hawkish, so let's see if the Bank of England delivers. The CAD yen, well, the market's still coasting sideways, but still holding to a somewhat negative pattern. I still feel the market is looking to that downside challenge and then look for 89.60 as a potential target. Overall, I'm not that bullish when it comes to gold. I think the market's going to struggle at these levels, or even if it navigates higher, it should find further supply and increase as it gets closer towards the region, but somewhere around 1,816 to 20. I feel the market is destined to challenge lower, and if we get down towards that bottom side of the range, around 1,784 to 88, could see risk of down to that base of 1,757 to 64. Now there is 5 negative candles, 3 being dojis, and the other 2 are hanging men, that is from the candlestick, with a RSI declining and a MACD weak. It's time to see oil stage a pullback. I'm looking for a move back towards somewhere around $81 a barrel as a broader target, with the immediate seen around 86.60 to 84.70. Well, that wraps it for the day. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.